This panel has a slightly different structure and perhaps also a slightly different purpose from the ones that have come before, since it is the final session of our conference. We thought we would set it up a bit differently. First of all, you will notice from the program that it is a panel with an entirely democratic structure. It does not have a moderator in de jure, which is not the same thing as saying that it has no moderator de facto. And I'm going to assume that role. And the second thing that we wanted to do with this panel was to give it, if you like, a practical cast with the idea that there may be governments in Europe who will set about the task of bringing the crisis to an end, both in their own countries and in the larger European setting. And we would like to have a discussion about how such a government might go about that task. And it seemed fitting, since we have the opportunity to invite Alexis Tsipras to join this panel, because he is the one instance that we happen to have in the room of someone who might potentially form such a government. I don't think anyone else here, none of the American academics, is likely to be in a similar position anytime soon, although having had a brother who served as the foreign minister for East Timor, I would say never on these points. But so what we're going to do is I would like to invite Alexis Tsipras to make very brief remarks. He's already given a very full exposition of his position statement to the conference, but just to set up the conversation a little bit, and then to invite comments from the four remaining panelists, and then after that to have a broad discussion with the audience, which will not take the form of question and answers, although questions can certainly be directed to the other members of the panel, but of comments and discussion and reflections on what perhaps should be done. So with that, if that seems like a reasonable way to proceed, let me yield the floor, Alexis Tsipras. Either way, you can.
Yes, okay. Thank you, James. I think that today it's a very strange debate for me, because the theme, the issue of this debate is advices to next government, so it's very strange to give advices to yourself. But so I'll try to say some words about the current situation in Greece. As we speak here today, the Troika guys are again in Greece. Greece is a country with 30% unemployment, and 60%, especially 60% unemployment for the young people. And some victims of this situation are today with us. Scientists that they have already emigrated to the United States to try to find a way to continue their studies and to work, because in Greece it's very difficult for these people to work. Despite that, the focus of the government and the Troika is to lay off public sector workers and remove any obstacle for layoffs in the private sector. They also intend to shut down the defense industry and cut pensions even more. There are measures that will deepen recession and make Greece unable to pay back its debt once again. However, Prime Minister Mr. Samaras, in a public appearance after a long time, promised that Greece will anyway abide to the program. He claims that there is no alternative. So it was back in the 80s that Margaret Thatcher coined the slogan, "There is no alternative," she meant to convince us that at that time there was no alternative to neoliberalism. So I think that today we can also say that there is no alternative, but not to neoliberalism. We can say that there is no alternative to the ending of austerity, to the ending of the memorandum in Greece and in all over Europe. After 5 consecutive years of recession, 3 consecutive years of deep austerity and catastrophe in Greece and especially in the south periphery of Europe, we believe that the strategy of devaluation, the strategy of internal devaluation in the hope of export-led growth has failed dramatically. That is why we present a plan that restores domestic demand and creates employment. During my speech yesterday, I asked the audience if there is anyone in the audience who believes that Greece could repay a total sum of 83 billion in interest, if there is anyone who believes that Greece can achieve a primary surplus of 4.5% annually until 2020, because this is the program of the memorandum that we have already signed. Even Prime Minister Mr. Samaras appeared to be uncertain on whether Greece can go on the markets by May next year. And this is because the terms of a new loan and a new austerity program are currently being negotiated this time that we're discussing. So the third memorandum is in the making. And this is the strange, because Mrs. Merkel says that we have to implement these measures of austerity because the European taxpayers they have no duty to pay for the Greek banks. But this is absolutely the strange, because these programs create the necessity of new loans. And I want to add that the European taxpayers, they don't pay for the Greek people, but they pay for the bankruptcy Greek banks. So I think that this is, let me say, the theater of the absurd. This is the vicious circle, and we have to stop to continue this vicious circle. From the outset of the crisis, Syriza has supported the obvious, that Greece's over-indebtedness is itself a Eurozone problem, that this crisis was not a Greek crisis, but it was a European one. They said at the beginning that the Greek people are lazy, but afterwards they have to answer the question, okay, the Greek people are lazy, but the Portuguese also are lazy, the Italians also are lazy, the Spaniards also are lazy, so everybody in the south periphery are lazy. And the Irelands? What about the Irelands? So I think that we vindicated when we said at the beginning, the very beginning, that it was not a Greek problem. Of course, we admit that the Greek situation have its own characteristics, but of course the main problem is the structure of the Eurozone, of the monetary union, the structure of Euro. Since a problem is best addressed at the level of its appearance, a European problem requires a European solution. So, dear friends, let me say that it was some days ago that Greece's Minister of Finances, Mr. Stournaras, defended the memorandum as the only credible policy document in the country. This is rather a political apology than a reflection of political reality. Every day, Syriza is improving the programmatic and policy details in the National Plan of Productive and Developmental Reconstruction that we have elaborated already and which will replace the memorandum. Let me say some words about that. It's a plan to stabilize both the economy and society, and at the same time, it's a plan to put a stop to the free fall of wages and salaries, along with fiscal consolidation. It is a plan to immediately address the country's humanitarian crisis, because we believe that this is the most important that we have to do in Greece, the humanitarian crisis. We will place a priority on financing and overall enhancement of economic sectors of traditional comparative advantages, along with new sources of growth. It's a plan to guarantee access to public goods. Syriza's overall national plan for the economic, social, and ecological reconstruction of the country is predicated on three mutually reinforcing pillars. The first pillar is this that we could say the stabilization of the economy. We will achieve this through a rise in public revenues by reorganizing the tax system so as to tax high incomes and wealth and fight tax evasion, tax avoidance, and transfer pricing. We will put a stop, we have intention to put a stop to the fall in public spending and reorganize it in such a way so as to address the humanitarian crisis that Greece experiences. The second pillar is to overcome the humanitarian crisis by earmarking public funds to that emergency goal, as I have just mentioned. And the third pillar is to restructure the productive base of the economy. The goal would be to form a model of development generating decently paid, stable employment away from the past practices which sunk Greece into the crisis. So yesterday I tried to describe the four basic elements in this direction. I said a lot of things about the debt, our intention to negotiate with our partners a viable solution, to try to find a viable solution, not only for the Greek debt, but for the debt of the European periphery. I want to underline that I think this is very important for the audience to understand what happened in Greece, that we went to the memorandum 3 years ago because we had debt, public debt, about 120% of GDP. But now, after 3 consecutive years of implementation, our public debt is 175% of GDP. So this is the success story of the memorandum and of Troika. Also, yesterday I spoke about our intentions to reorganize the banking system. I think that it's very important, and I think that ECB could play a crucial role in this direction. And of course, I said more particular things about our intention to open a new strategy for the productive reconstruction. I think that this is the base key that we have to discuss about the future in Greece, because even we have a good result in our negotiation about the debt, and tomorrow the debt could be zero, if we continue this strategy of austerity and we have recession, we will create debt in the future. So the base key for the Greek economy is to try to go to growth, to develop with public investments, with European investments. So I will close my introduction with that. I think that in a European problem, we have to find a European solution. And the European solution is a restructure of the debt, a viable solution of the debt, and at the same time, investment program like Marshall Plan, like New Deal, investment program that will give growth not only to Greece but to the European periphery. And this is the key to overcome the crisis in the European level. So with these few ideas, I will give the floor to the other colleagues of this debate. Thank you.
Let me now yield the floor to my colleague and the co-organizer of this conference, Yanis Varoufakis.
Thank you, Jamie. Thanks, Alexis. Thank you, everyone. Any advice I would give to incoming government would have to be premised on three very simple ideas. The first one is that the current fiscal adjustment program in the program countries, but also in countries that do have an effective but unspoken program, like Spain, Italy, is that this kind of program has completely and utterly failed, as Alexis was saying. But the reason why it failed was because it was designed to fail. It was a program that was the equivalent of the banking sector's extend and pretend strategy. There was never any chance, and I think that its authors knew it, that it would succeed, except in prolonging the crisis and giving them an opportunity to decide what they wanted to do with the Eurozone, something that they still have not decided about. As this extend and pretend strategy is being implemented, the social and economic cost in terms of the productive capacity of the peripheral economies is tremendous. And it will continue to mount. So governments that come in power, inverted commas power, in countries like Greece, Portugal, Ireland, and so on, in the next year or so, will have to come to terms with this very, very dire fact that their economies, while under a cloud of marketing and propaganda, are shrinking. And their capacity to remain sustainable within the Eurozone is shrinking by the day. This is the first premise. It's very simple. When I say talk about marketing, take, for instance, Portugal or Ireland today. There is a lot of talk, triumphalism, I would say, that they're exiting the program. This is grossly exaggerated. Why would it matter to Dublin or Lisbon whether the borrowing that they're doing comes from the European Stability Mechanism or it comes through the markets when the ECB is holding the pistol of OMT to the head of bond dealers? If the conditions for borrowing are conditions of savage austerity and the continuation, effectively, of the same program. Because this is what is happening. The powers that be in Europe really want to declare victory for austerity and an end to the bailouts and the success of the bailout programs. So let me put it very simply. If it wasn't for Mr. Draghi hinting at bond dealers that if Portuguese and Irish bonds were to rise beyond a certain level, he would burn them by monetizing a part of those bonds, there would have to be another ESM loan for Portugal and for Ireland. It's very simple. There isn't one because Mr. Draghi was given the go-ahead to go ahead and do it. But from the perspective of Dublin or Lisbon, it makes no difference. It really doesn't matter whether you're borrowing through the OMT or through the ESM, if the conditions of borrowing are effectively extending this cycle of doom between insolvent banks, an insolvent sector, and a shrinking social economy. So this is the first premise. The current situation is unsustainable for our countries and, in the long run, for the whole of the Eurozone. The second premise is that this gross denial is not going to be punctured through logical argument. It will only be punctured if at least one European leader in Council vetoes that gross denial. And the third premise is that Tina has to die. This idea that the program that is being implemented now in the Eurozone, especially in the periphery, may be harsh, may be imperfect, may be problematic, but it's the only show in town. And there is no alternative which is consistent with the charter of the ECB or the Treaty of Lisbon or whatever. That pernicious and sinister lie has to be exposed for what it is. Now, before I say a few words, what I plan to do in the next few minutes that I have is say a few words about what I think a new leader entering the European Council should be doing in order to break this veil of silence, to remove it. And secondly, I want to start fleshing the idea about what the alternative is. And Jamie, Stuart, and I have been working on that. I'm going to be addressing just the question of debt, for instance, and what could be done regarding debt management, centralized debt management in the Eurozone, without violating any of the treaties or creating new institutions or moving towards federation or anything like that. And then I'll pass the baton on to my colleagues who will talk about other aspects of these ideas. But first, let me say this. Just allow me to sort of reiterate the point I was making about the powerlessness of logic at the level of the European Council. I was having a discussion with one of Mrs. Merkel's advisors some time ago, about a year and a half ago. I won't mention names, but I think you all know who it is. And he was commenting on the proposal that we will be putting forward very favorably. And at that point, I said to him, well, if you like this proposal, why? I mean, you are one of the advisors of Mrs. Merkel. Why don't you just put it to her? And he simply said, he smiled and said, well, even if I convince her, she's not going to implement it. And of course, then I asked why. And the answer was because, let me put it very simply. If she were to implement your proposal, it would mean that that Germany would never be able to leave the Eurozone again, ever. It would be stuck in the Eurozone. Whereas now, I mean, it doesn't want to leave the Eurozone, but it can. It's a surplus country. So any announcement that it would leave would not cause the sky to fall upon it in terms of a capital flight. There will be the opposite. There will be a capital influx. And some people in Germany think that this would be sustainable in terms of the exchange rate of the new Deutschmark. They could do something like what the Central Bank of Switzerland are doing to cap it. And at least Germany, would have a massive flow of capital towards it, and it would manage to deal, it has done it before, to deal with a revalued exchange rate. Whereas a country like France or Italy, if it announces that it leaves the Eurozone, is going to go back to the Neolithic age, more or less, within a few weeks, given that it has no currency to devalue, and it has to wait for 8-10 months before it devalues the currency. It's like, sort of announcing in advance, 8 months in advance that you're going to devalue. It's a catastrophe. So every time Mrs. Merkel and the French president, whoever it might be, Sarkozy, Hollande, Galbraith, you'd make an excellent president of France, I think, Jamie. Every time the German Chancellor speaks with the French President, especially in a forum like European Council, the French President keeps his mouth shut. And he keeps his mouth shut very, very simply because he knows that Mrs. Merkel has in her handbag an exit card. She can get out of jail or get out of the Eurozone card. And he doesn't. That creates a major asymmetry in bargaining power. And therefore, the French president is not going to speak his mind. It's very simple. The moment Mrs. Merkel agrees to changes in the way that the European Central Bank operates, in the way the European Stability Mechanism operates, changes that bind Germany not to leave the Eurozone, or at least makes it much, much harder for Germany to leave the Eurozone. Even though Germany doesn't want to leave the Eurozone, that exit card disappears. And therefore, the French president starts speaking again. And Mrs. Merkel, not looking at it personally, but she feels the moral imperative not to diminish the bargaining power of the office of Chancellor. So she wouldn't... I don't know whether this explanation by Mrs. Merkel's advisor holds water or not, but it simply demonstrates the point I'm making, that it's not simply a question of having a rational discussion with these people and trying to convince them. So, two things before I pass the baton on. Firstly, how do you shift the agenda within the European Council? What is your bazooka going to be? Heiner mentioned yesterday when we were discussing that you should use the nuclear option. And the nuclear option is, if you don't talk to us about these issues, we're getting out. Now, I don't believe you should go to battle naked with just a nuclear bomb strapped around your waist. I think you should have other weapons first. And I think we do have them.
If you have nothing else?
I think we do have them. Well, that's my point, Heiner, that I believe we do have. We don't have to go naked. So, for instance, my advice to an incoming Greek Prime Minister would be that there should be a level of levels of escalation of credible threats that will be used for one reason and one reason alone, to start having the debate in the European Council that we have been steadfastly refusing to have over the last 4 years. And there are a number of those weapons. The first one is, for instance, when a bond of one of our governments is maturing, a bond that is now held by the European Central Bank, and our government has to borrow from one pocket of the European Union, the ESM, in order to repay the other pocket of the European Union, the ECB. This is Ponzi austerity, I call it, because under conditions of austerity, you supposedly are working towards reducing debt, but all you're doing is you're borrowing from one pocket and you're giving it to the other. Meanwhile, the debt increases. Okay. Now, you can simply say that unless we have a reasoned and rational discussion in this European Union Council about our program, Greece, Portugal, that bond is not going to be redeemed by our government. And if you want to cut our ELA, do your worst. And it's my considered opinion that if they had the capacity of cutting our ELA and getting rid of us, they would have done it. Then you can escalate this further. As Alexis Tsipras was saying yesterday, the European Union itself acknowledges that our program, at least in Greece, is not sustainable. And the European Parliament is beginning, under Mr. Schulz, I believe, is beginning a process of investigating what went wrong with the Troika visits and this program. Well, you can't ask us to implement a program that you have already declared to be defunct. So there will be no 15,000 public sector employees fired this year or the next month. And the Troika is not welcome to come to Athens to discuss with us until and unless the whole program is reconfigured at the level of the European Council. So in other words, Heiner, there's no need to invoke the nuclear weapon. Let them do it. Okay, and now let me just finish with one example, and then my colleagues will come up with other examples of why TINA has to die and can die. Take, for instance, the question of the Eurozone debt, which we all know at some point will have to be restructured. The point has always been that the ECB is not allowed to monetize the debt, the no bailout clauses, and so on and so forth. Now, the fact of the matter is that there are creative and innovative ways that we can utilize with the ECB at the helm of overall debt restructuring for the Eurozone public debt, which do not violate the charter of the ECB, do not create a Euro treasury or a federal treasury, and which involve no debt guarantees from one country for another. Let me just run this by you very, very briefly, and then I will stop. Consider a young couple that is indebted to a bank. They have a mortgage. Their creditworthiness is not very good, so the interest rate they're paying is high. And they have difficulty meeting their repayments. Now, suppose that a parent of one of the two members of the couple has a high credit rating with some other bank or with the same bank, and he or she gets a loan at a lower interest rate using his or her higher credit score, on condition that the youngsters, the young couple, are meeting the repayments on a monthly basis. This is the basic model that we're proposing for the ECB, the role of the parent. The ECB can borrow itself by issuing ECB bonds from the money markets and immediately do two things. Open a debit account for the youngsters, for Greece, Portugal, Ireland, or whichever other member state of the Eurozone wants to participate. And the ECB uses the money that it has borrowed itself internationally in order to service not the whole debt, but only the amount, the proportion of the debt of the member state that that member state had the right to have according to Maastricht. So we call this Maastricht compliance. So for instance, in the case of Italy, it would be 50% of every bond redemption would be serviced, would be paid for by the ECB using funds that the ECB would borrow by issuing ECB bonds from Chinese, German, Japanese, American, even Greek investors who have a very limited pool of potential financial instruments these days that are quite safe. And an ECB bond would be as safe as they come. Now, people say to me, yes, but a central bank issuing bonds? Well, yes, a central bank is issuing bonds. Mexico and Chile do it all the time. I don't see why the ECB couldn't do it.
U.S. Treasury, too.
Yes, but that's not the central bank. Whereas Mexico is the central bank that issues the bonds. Right? Now, the debit account is very important because what effectively the ECB does is it says, okay, I issue these bonds to Ireland, to Portugal, to Greece. You repay these bonds in the fullness of time, but at very low interest rates that only the ECB can fetch in that debit account. So it's not a credit account, it's a debit account. Right? And then you can have a super seniority clause whereby the debts of Italy, of Ireland, of Greece to the ECB have priority status, super seniority over all other debts. So even a country that defaults in part of its debts would not be defaulting to the ECB. And finally, you can just make this completely ironclad so that the ECB is absolutely certain of getting its money back from the member states. You can have a small part of the ESM funds being used as an insurance premium kind of thing for the very remotely possible case of a hard default on all its debts by Greece, by Portugal, whatever. Now let me put it very briefly and conclude with this. According to very widely acknowledged estimates, such a scheme would allow ECB bonds to come at yields of no more than 2%, 1.8, 1.9% under present circumstances. The ECB could then charge on the debit accounts a small premium for servicing that scheme, so that Greece or Italy could be paying no more than 2%. And that would constitute, over the next 20 years, a reduction of about 30% of total Eurozone debt. The debt crisis goes away. And notice, no new institutions, no transfers, no German guarantees for Portuguese debt, and absolutely no transfer union. Thank you.
Yield the floor to our next speaker. I think Monica's next.
Yeah.
If you want.
No, that's right.
No,
That's right.
I prefer you to go.
Who has a deeply difficult task, since she is going to be giving a talk at lunch. So she will be, if she is unusually circumspect, it's because she is holding something in reserve. Monica Frassoni.
Well, thank you very much. I think that was mostly an invitation to be brief, which I very, very, very gladly accept. Well, the first thing I want to say is that I would be more interested in giving suggestions to the people of Europe than to the governments of Europe. And the first suggestion that I would give to the people of Europe is simply to go and change the governments, because as we all know, and notably actually the one that is happening, that is acting at European level. Because as we all know, even if the present 17 member states of the Eurozone were changed since the beginning of the crisis, I don't think that their policies did change. So I believe that what we really need is it's a complete reversion of speed in terms not only of austerity. Austerity, a friend of mine always told me, it's not a policy, it's a moral attitude. Anzi, una moralistic attitude. But I will come back to that. And also, we really need to go in the direction of both a deep change in policies, and all of you said it during these days, but also, and here I disagree with most of the people who spoke, a real change in the way the European Union works. Also because, to be really frank, I believe that all the proposals, or most of the proposals, even the ones that Yanis just explained, will require exactly the same kind of political will than to make the European institutions work in a more efficient and less intergovernmental way, meaning going into the direction of a more integrated union. I do not believe that the fact of not changing, for example, this question of the unanimity vote or the way in which the central bank acts or its competences is something that is less possible in terms of political activity, in terms of political goal, than to implement the proposal that you just did, Yanis, or that we heard during these days. I may be wrong, but I definitely think I may be wrong in the sense that by having a change of political majorities, for example, in the Parliament and in the Council, and in the Commission, you could go in the direction you just said. But the issue here is that unless there is a clear decision that the euro is here to stay because the European Union is here to stay, and that is the concept that I will try to develop at lunch, I believe that it's going to be very difficult to find a solution that will take us into the right direction, which is actually to implement the policies which would make the financial market and bank and whatever it is crisis at least connected to the fact that people will live better and will be less fearful of the lack of jobs or things like that. So I think that it is allure to say that we have to find a way not to go to supranational, let's say, because we can find some other solution. I really fundamentally believe that we need to have a decision to find, as Alexis said, common solution to common problems and to leave the rest aside. And I believe that that it is not the case that we can do without this. Now, the second thing I want to say is that we spoke at length in these days about a New Deal. This thing came out very often. So the second suggestion I would like to say is that unless you put the word green in front of this New Deal, we are not qualifying what we actually want to do. Because when Alexis and others talk about investment policies or the fact of having a different budget, and I will talk about it also in the intervention later on, so I will not do it now, I believe that we have to qualify that. Not all policies are the same, not all investments are the same. There are some which are a complete waste, and we actually are completely detrimental. If you, for example, go to Canary Islands in Spain, and you see all the ports and all the highways just passing by under your nose, if I were a German, or for what matter an Italian, because also Italy is a net contributor to the EU budget, I would be really furious, because this is a real example of complete waste. So, and the same thing goes, of course, for the decisions that the European Union is currently taking about infrastructure or big works, tunnels and highways and all the rest of it. So I believe that here as well we have to qualify the kind of New Deal we want in order to make Europe able and credible when we, when we are proposing it to act. Third and last suggestion. I think that when we discuss about the issue of democracy and of legitimacy, I think that we are facing a situation in which there is a cat eating its own tail. That is to say that if you are able to find solutions, you are legitimate in a way. Because whether we like it or we not like it, people like very much to participate, but above all, they like to have solutions to their problems. So even if, of course, we have to be democratic, and of course we have to make people participate, I also, and this is also another issue that we'll deal with afterwards, and in this slightly disagreeing with the idea that Yanis put forward here, that we just need to convince a couple of governments in the councils. I think that there is much more that we have to do. I believe that we have to deal with this question of democracy, above all having the idea that unless Europe is felt like useful and able to bring solutions, we are not going to get the adhesion or the legitimacy of the European project by itself. I may think that this is very bad because I am a federalist, I am a convinced European, but I believe that the question of finding the solutions and declaring the current ones completely failed is something that we have to very simply continue to repeat, exactly as other people continue to repeat other truths, like, for example, that the next European elections will be necessarily won by anti-European forces. Was I short enough?
Very, very to the point, yes.
Splendid. Stuart Holland.
Okay, 3, 4, maybe 5 points. Let's start with democracy. Now, I think many people in this room know the situation of interwar Germany. But let's be quite clear, the perception in Germany that joint European action, for example, on bonds, will lead to inflation or hyperinflation is totally misconceived. It's a misreading of history. In 1929, support for the Nazi Party in Germany was 2.6% of the population. By March 1933, it was 38.6% of the population. Then, of course, he was invited to form a minority government. What happened in the interim was Heinrich Brüning, who was chancellor from 30 through 32, did exactly what Europe is now doing. He cut, and cut again. He repaid debt in the sense of reparations when American financial institutions were willing to lend to Germany without fulfillment of the reparations. He froze wages, most wages and salaries, cut others. And this is what, and then what happened? He lost support with the public, he lost support in the Reichstag, and he started to govern by decree, just as the Troika is seeking to govern by decrees. And therefore, I mean, there is a clear reading on this. Further, in my view, if you hollow out national democracy, someone else will fill it, and they won't necessarily be Democrats. And I therefore think that Monica's fear about what might happen in the European Parliament is very well grounded. But it's not just in European parliamentary elections. It's, of course, I'm sure you agree, it's undermining democracy. Now, I just want to widen this out a bit in relation to Europe and the rest of the world. Europe is a third of the global economy at the time being, and the problem is that the whole model of global economic cooperation is based on a false premise. That false premise is David Ricardo and comparative advantage. This underlines most of the policies that we've had since GATT, since the IMF, the World Bank, and the WTO. And it's a complete fallacy because although it's repeated by people like Samuelson in the so-called, I'm not going to get too academic, the so-called Heckscher-Ohlin-Samuelson theory isn't Heckscher's or Ohlin's, it's Samuelson's and Ricardo's, because it has no capital mobility. And this is a complete nonsense, because the driving, as the UNCTAD figures show, what has driven world trade since the early 1960s is foreign direct investment. We found that I was advisor to a Commons committee, and we took evidence on that in the early 1970s. They were asked from leading companies. What they said is the cost of labor in Hong Kong, Taiwan, Philippines, Mexico, Brazil is a tenth that or less that of the UK. Now, how do you compete? I had something to do with drafting labor economic policies in the 1980s and predicted deindustrialization of the UK. Sadly, I was right. There was no industrial strategy. This also poses big problems for the United States. Half of the exports of China for several years have been through foreign direct investment and production. It's that which is enabling has enabled China to get the technology transfer from the West and is now about to overtake the West on innovation. The counterpart is that exchange rate changes on which Keynes relied, nor protection will work for the US. This again we learned in the UK. The first major devaluation following Bretton Woods was 1967. A study of the top 220 companies that accounted for 2/3 of Britain's visible exports found that none of them lowered prices in foreign markets because of this devaluation. I'm sorry, no, I strongly disagree. I don't mind being interrupted, provided I get an extra minute on this. No, I'm sorry, you're really wrong. It wasn't that it was too little. It was that all these companies were already multinational in other countries. If they'd followed through the devaluation, they'd compete against themselves, which denies any market logic. And the case for the UK at the time, its foreign direct investment was 220% of its visible exports. For the US at the time, it was over 400%, 4-to-1. And other studies since from the US shows that they will not follow through a devaluation in relation to increased export volume in other countries. Further, protection won't work. Protection against exports from China to the US will have a business lobby that will make George Bush's attempt to protect steel look like a tea party. And I use that in the other sense of the word. Now, this is very problematic in the sense that thinking about global economic governance has, by many Keynesians, has been, let's get back to Keynes. The world's moved on since then. The key issue is nonetheless one that Keynes addressed, which is the recycling of global surpluses, which we in the modest proposal have stressed, and stressed again. And that is in China's advantage. It's in China's advantage to invest in Eurobonds, and if Ms. Merkel doesn't want the word, then we'll call them E-bonds, where the E is a euro symbol, because that's what markets would denominate them if they were issued, because China doesn't want a collapse of the European economy, and the US doesn't want a collapse of the European economy. And we can distinguish here bonds for recovery from bonds for mutualization of debt. Then, George, could I have your help? You still here? Yes? Oh, it's on. Okay, I don't know if you can see this. It's very simple. It has the merit of simplicity, if I may put it this way. I think I probably referred to the fact that I did a report for Delors on Towards a New Bretton Woods. I'm among 20, 30, 40, 100 people who've called for a new Bretton Woods, but that was 20 years ago, and it's not happening. And the revision of the share of India and China combined in the voting weighting of the IMF is not 1/5 of that of the IMF, it's 1/5 of the share of the US. It's not going to work. What I proposed is, and had discussions on this with permanent representatives to the UN, I'm afraid already in 2009, is that the G20, those of us with some experience of interministerial conferences know that the Secretariat always puts forward the potential problem tomorrow for yesterday's problem. There's no long-term thinking ahead. And I don't think that will be met, even if the G20 appoints a permanent Secretariat. They'll still just churn out reactive proposals to problems. We need proactive proposals for solutions. Therefore, what I'm proposing is that the G20 should constitute the governing body of a World Development Organization. Call it anything you like, but I would like it to stress development, not just economic security. There are proposals for the G20 should appoint an Economic Security Council. You can be sure the rest of the world will see that as the West wanting to defend its financial institutions. That the UN, it may well be that a permanent representative of the UN should be on the governing body, symbolically, probably without a vote, but that the United Nations agency should be able to take part in the working groups of this World Development Organization. The Bretton Woods institutions, lower left BWI, should report to the WDO. Dominique Strauss-Kahn proposed that for the IMF at the time of the crisis, but would not be governed by a World Development Organization. They would not be governed by it. That it should include sovereign wealth funds on its working groups, whose resources vastly outstrip those of the Bretton Woods institutions, and also regional development, lower right, regional development banks and funds, like the European Investment Bank, like the BNDES of Brazil, both of whom are lending more than 3 times the World Bank. Then there should not be any majority decision-making binding on other member states. It won't work. It won't work any more than the Keynes plan, which was supranational and which would have imposed penalties on the US if it didn't revalue. Now that, I think, is where the question of recycling global surpluses could be addressed, and especially in relation to social investments.
Thank you very much. In the early summer of 2000, a presidential candidate for the presidency of the United States, it was Ralph Nader, announced to the National Press Club that he would release the name of his designated chairman of the Federal Reserve. It was me. He didn't consult me on the point. But So I now add my nomination for the presidency of France to my gallery of improbable distinctions. I have yielded myself a few minutes at the end of this conference, and I don't propose to interject any dramatic new ideas. I thought it would be more useful if I just picked out a few points that have been made already over the course of the past two, I think, extraordinarily intense and fascinating days, and just reiterated them a little bit. One, I think, of the most valuable and interesting comments of the conference came at lunch yesterday when Yves Leterme described the climate of urgency and fear that surrounded the moments of most intense decision-making, for example, in 2010, when the very large loan was made to pass through Greece for the sake of saving its creditors. This is a familiar and important experience, something that we who were engaged at one level or another in the crisis of late 2008 in the United States that led to the TARP legislation experienced directly, and I have experienced it on numerous past occasions, going back to my first legislative experience was with the financial restructuring of the city of New York in 1976. It is something to be taken account of, anticipated, examined, and overcome, because it has an extraordinarily distorting effect on the quality of decisions. The function of financial markets, of financial sector, is to serve a public purpose. It is worth fostering such a sector because you have that way a decentralized capitalist economy rather than a centralized socialist one, so long as there is a reasonable compromise between the interests of the institutions and the interests of the larger society. In other words, so long as both are served. It becomes less valuable when the entire function of the policy is to protect the institutions and the goals of the society are lost altogether. And it's a situation we have seen before. This was the situation in the 1930s, and in the 1930s, the response in the United States was to create an entirely new set of institutions to displace and replace the functions that were no longer being served by private finance. Reconstruction Finance Corporation, Homeowners Loan Corporation, Agricultural Adjustment Administration. One can go down a list of agencies that went beyond simply creating employment, public works, and public spending to provide an effective structure for finance. Federal Housing Administration, Fannie Mae, and so forth. Was also the path taken by Europe in the wake of the Second World War, necessarily, because the private institutions did not simply take up whatever role they had been thought to play immediately. You needed a national program, an international program of reconstruction and development. So it is not something that's unprecedented, but it is a consideration that we have largely avoided facing until now, with an international policy of presuming that recovery can be effectuated through the existing financial sector and institutions. It's an open question as to whether it's possible. A second conversation of great interest in this meeting occurred, shall we say, off the record, or off anyway, away from the microphones last night. And I listened to it with real intensity. It concerned the problem of joint action on public debt. The question of what you do if you are a small country faced with insuperable debt problems, trying to build an alliance with other countries who may not feel that their own problems are quite as insuperable as yours are. This is a problem very familiar from the history of leper colonies and of Latin American debt. And one can go back to the 1980s when Alan Garcia's Peru attempted to put forward a proposal to limit the extent of its debt service to, I think, 10% of its export earnings, and suffered a terrific, and in many ways vicious retaliation from international finance for the temerity of attempting to do that. But then, over time, the climate changed. And it became clear that there was no way forward that did not involve a restructuring of the debts. There were essentially successful defaults that led to negotiations, the final one of which, or one of the last one of which, was in 1989 in Brazil, which was so rapidly achieved in the wake of the transition of administrations in the United States, the arrival of Brady in the Treasury, that it's practically forgotten today. Similarly, in more recent times, Ecuador, Argentina, restructurings happen. When they happen, of course, it's a promise that they will never happen again, but that's a promise that one doesn't need to take too seriously. The problem is time. The problem is the period in which denial rules, in which austerity is the proposed policy, coupled with privatizations at fire sale prices, deepening social stress, the erosion and destruction of public institutions, and ultimately social violence. The task is to make the period as short as possible before reality is recognized. And that requires, I think, two things, one of which we are engaged in this meeting, which is the education of the people that there are alternatives, especially in the larger debtors who have more leverage, Spain and Italy in this case, and a change of mind in the creditor countries, which have conflicting interests, some of which are dominant at some point, and others of which come to the fore at other moments. And this is what happened in the United States in the late 1980s and 1990s. My experience is that when change does come, it comes quite quickly. It is not, generally speaking, admitted to. This is a little bit like the situation in Orwell, where you were at war with East Asia, and then suddenly you're not. You're now at war with Eurasia, and you were never at war with East Asia. And those of us who have been arguing at this point will be left in the slipstream of this as forgotten figures. That's the fate of having been prematurely correct on these questions. But it can happen. And one thing to bear in mind is that in the larger European context, these debt questions are not all that large, at least as far as the smallest countries are concerned. They are, as I think Damon pointed out, the Greek debt is much smaller than what was guaranteed to Citibank in 2009. Another function of the conference, what we have been doing here, and our function, I think, as independent contributors to this discussion, has been to weigh the alternatives which are before us in view of economic logic, political feasibility, social impact. We've had a number of different articulations of that strategy, from the construction of new major institutions to really tough bargaining alternatives, and even the articulation of the current neoliberal market-based approach. And I think against these, in my modest view, the proposal with which Yanis and Stuart and I are associated, the modest proposal, holds up pretty well. It's not my purpose here to go through a defense of it in depth or to treat it as a sacred text. We've revised it in the past, and if circumstances require, or if it is expedient to do so, we will certainly revise it again. But the point of the modest proposal, the point that it makes for public purposes, is that there is a possible alternative. It is to puncture Tina by saying no. There is an alternative. It's a feasible alternative. It's an alternative which turns on change of ideas and policies, but not on massive change of institutions. And that's something which is, I think, can be established as a fact, as a point of reality, with very strong effect in the debate. Because a lot of what we're up against depends upon the view that there is no other way. And I want to close by speaking to just one aspect of the modest proposal, which seems to me is the one with which I have been particularly associated, and that's the new element, which is the element that deals with the problem of social solidarity and the human crisis, the humanitarian crisis in parts of Europe. The idea here draws on, in part, American experience with social insurance, Medicare, Medicaid, but especially Social Security, which was not enacted in a time of prosperity, but in 1935, in the relatively early stages of recovery from the Great Depression. It has an important economic role as setting up an institution that is stabilizing, that prevents catastrophic loss of income in the most vulnerable parts of the population. And that's very important because it operates very quickly and it moves out in a very decentralized way directly to households. It doesn't have to pass through governments that may be incompetent or corrupt. And it doesn't require engineering or capital expenditure or other things which can be bottlenecked. Simply happens very fast. But it has another role, it seems to me. And this gets to something that Monica Frassoni said, which is a role of convincing people that they are part of some larger structure, that they have a direct connection to it, that this is not something remote and expendable in their lives. Right? A Social Security check comes to you from the United States Treasury. It doesn't come from the state of Texas or the state of Nevada or the state of California. It comes from the United States. And this was initiated in the United States when the memory of the Civil War was not yet over. It's only 70 years past, 1865 to 1935. So we are looking at something which tied the population of the United States together at a time when certain questions which we take utterly resolved now were not necessarily so fully resolved. This political role, I think, has largely been forgotten in the United States, except perhaps by some of the opponents of Social Security. But it is clearly a front and center question for Europe. It doesn't require federal institutions to do such a thing. It can be done through an insurance fund of some kind. But it would have the purpose of sending an important signal to European populations that they are bound together by some common level of mutual support, and that it would take away the role of some of the harshest political weapons that are available, which was also something in the United States where you had political organizations that depended upon patronage. Right? Social Security liberates households from that kind of dependency, and a social solidarity scheme would free European communities, in certain cases, from the appeal of exactly the same kind of patronage that's coming from elements that are essentially fascist in character. So I think that as we think about this, there was a theme of reconstruction, which is vitally expressed by Alexis Tsipras at the start of the session. But I also think that a precursor to reconstruction is stabilization. And it is to create a framework in which it becomes clear, and maybe there is no alternative, as Monica says, to Europe. Maybe there shouldn't be any alternative to Europe. And therefore, we should be taking the steps to make the larger enterprise seem like a plausible, something with plausible prospects for the full extent of its population. Thanks very much. We have about 10 minutes, and I think at this point I would just like to open it up for
Yes,
questions to this part of the panel or general comments. Sir.
Hi. So I had a question for Professor Varoufakis. First of all, I'd like to say I really appreciate your. Thank you. I really appreciate your metaphors. I was here in 2011, and I seem to remember you made one about a Band-Aid on a gunshot wound in reference to the present solution to the Eurozone crisis. Today, you've made a metaphor of a young couple taking a loan from their parents. If such a system is put in place and Greece is able to borrow at a low interest rate from the ECB, do you believe that it will be enough to reverse the effects of austerity on the Greek economy and immediately address that humanitarian crisis, as mentioned by Mr. Tsipras as well?
The brief answer is no, it wouldn't be enough. In mathematics, we make the distinction between necessary and sufficient conditions. It's a necessary condition, it's certainly not a sufficient condition. That's why we have other planks to our proposal, like, for instance, an investment-led recovery European Green New Deal, Monica. And also the policy that James described about relief of the humanitarian crisis. The other policy which concerns the banking union, a proper banking union in juxtaposition to the current one, which is pronounced in name in order to be denied in substance. So the point is to put together policies which can be supported by existing institutions in the next week and be completed by, the beginning of December.
100 days.
By the beginning of December, to create the stabilization which is necessary before we can start talking about a possible federal future.
Professor Raffer. And then I'll go to Professor Rucher.
Thank you. Combining the last panel and this one, I would like to remark on the point about the built-in stabilizers in the United States. Now, they were described very well, but the problem is it would take a long time in Europe to establish a similar kind of inbuilt stabilizers, necessary as they are. Because at the moment, in the foreseeable future, I don't think there's enough acceptance for, well, this copying of the American way, neither with governments nor with the people. The second thing is, who could stabilize then if we have no federation or no union to stabilize? It would be the national governments, but they are at the moment hard-pressed and I don't think they would do it. So the only thing that could be done immediately would be to stop austerity, which is an inbuilt destabilizer, because that is the only way that could, to some extent, stabilize internal demand, which means, and it's a problem that goes beyond the so-called crisis countries, because I, coming from Austria, in my country, they also say we have to make savings in our budget because of the crisis and because, we are giving all this money to the crisis states, so our pensioners cannot get a proper increase according to the inflation rate because we have to economize our money. You have it not only in the crisis states, you have it also in the non-crisis state, and this has to stop, and this could be stopped relatively quickly. Now, unfortunately, I am now confronted with the Varoufakis dilemma, because you said pure reason will not prevail, and my argument is just a logical argument, so I can just say, well, let's hope you're wrong, Yanis.
All right, let's go and get 3 or 4 questions together. Why don't I go to Marco Riccieri, and then you can bring it down to Norman, and then we'll come over to this side.
My question deals with the European Parliament and democracy. The real problem is we have not only the danger to see the European Parliament with a majority of protest votes or fascist votes, etc. The real problem is that the European Parliament is no more representative. It's an institution in big crisis. Since years, the majority of European citizens don't vote for the European Parliament, refuse to vote. The absenteeism is over the 50% and increasing and increasing. So in the common opinion, it's a useless institution. What is the exit possibility we have in this case? And this is my suggestion, to use what is written in the Lisbon Treaty, so the social tripartite summit, to give voice and role to the civil society organizations that are provided in the treaty as the very representative body of the civil society, and this is the body that has the duty to oblige a European institution to respect the social clause that is clearly written in the treaty articles. Otherwise, you have the crisis of the entire Lisbon Treaty. So use this tripartite summit as the body that can change the austerity policies.
Norman Birnbaum.
Yes, well, many thanks again for this extremely rich conference and the contributions. I simply want to put in another footnote on the way in which beneath the discussions or parallel, it's hard to find a topographic schema, along with the discussions of policy, political economic possibility, we continually come to the question of the modern definition of citizenship on both sides of the Atlantic, the capacity of citizens to visualize, to intellectualize their situation in the play of economic and social forces, and the capacity, therefore, of our existing democratic institutions to provide more than provisional solutions to these difficulties. And I'd like to suggest, Jamie, that one of the more interesting things to do at some future date would be to put your all-star team of international team of political economists in a mixed lineup with some interesting political philosophers and political historians, and see what comes out. This is what a university is supposed to do, but given departmentalization and the like, universities rarely do. Your conferences over the past couple of years have shown that the Johnson School is quite capable of leaping these boundaries, so we look forward to more in the future.
Thank you very much. Let's go over here, Heiner Flassbeck. And, can we say something? I think I'll just let everyone talk.
Yeah, thank you very much. Unfortunately, I still fail to understand how you convince the German government to make a U-turn on all its policies. And I fear a modest proposal is not enough. It must be a much more radical proposal that you have. And you have to have, as I said yesterday, you have to have something in your hand. If you go just convince them, well, try it. I don't know how often you will try it. but they will convince you very quickly that they have the strong weapons in their hands, and if you don't have anything, you will not convince them at all. Look at Cyprus. What happened to Cyprus? It was a very bad experience of political blackmailing. They were blackmailed over the weekend that ELA, the emergency loan assistance, would be removed by the European Central Bank. It was done by the European Central Bank. And their banks would be bankrupt on Monday morning at 8 o'clock if they don't sign the memorandum on Sunday. Yes. This is the way these things happen. And if you don't have a weapon, I don't see how it will go. And to say we are defaulting, well, default, well, it's your problem. You need something to threaten them, those on the other side of the table. And if you don't have that, I don't see any solution.
Right. Bentsen.
I have a question. How can you compete and convince sovereign wealth fund invest, let's say, in Eurobond rather than invest in African or Latin American countries? Because this is a globalization situation.
Thank you. I think there are 1, 2, 3. I'm going to take them all and then just let the panel handle what they can in the time remaining, so give the audience a chance. Sir, over here. So we have about 4 to go.
Should I go next?
Over here.
Thank you. I have a question for Mr. Tsipras. I'm European too, and I'm getting pretty angry when I look at the situation in Europe right now and how the governments handle it. And I agree with you, this is not a Greek or Portuguese, Spanish problem, this is a European problem. I can't believe that we're facing humanitarian crisis in some of these countries, and I think we have to find a European solution. But I'd like to address the solutions that you lined out, because while I agree that austerity is not the solution right now, the solution you pointed out to restructuring of debt and investments and kind of a Marshall Plan is also only tackling the short-term problem and not addressing long-term structural problems that we're facing in the European Union. So I was wondering, I believe that the solution is a deeper integration, but I was wondering, first of all, what is your approach on structural reforms in the European Union, not just focusing on the short-term, for example, in Greece? And second, is the Greek population still willing to follow a deeper integration, or is it so angry at the rest of Europe that it would not even be willing to take that step anymore?
Thank you. Go ahead.
Thank you. I would also like to thank the organizers once again for giving us the opportunity, especially also that a lot of younger people are attending this conference. And I would like to make a footnote to the footnote. The issue of citizenship in the European context. I'm also a European national, if that's even a word. But I have a sense that one of the most successful projects that the European Union has done was the Erasmus exchange program. And many of the European students can very easily enter this program and be exposed for a semester or an entire year by going to another university. And often the problem is, we've heard this earlier, that the American students come to Europe and then only interact with American students. But in this case, it's this group of people interacting with other European students and not with the home university students. But it's at least you're interacting with other European students. But the sense I get from this experience, having gone through this myself, is that this emerging generation now does identify itself much more than the technocratic establishment with being European and not just being a national. And I think this sense, this emergence, this awareness, and this drive for integration, which I see on the people in their early 20s, in their late 20s, is very much established in our thinking. We grew up in this context, and this is in danger right now of being destroyed. And this program, the Erasmus program, is a very low-cost program, and this could be also extended to a work training program or something, going to different countries, and these would be very low-cost programs. But this would strengthen citizenship as well.
Let's go with two more. These are questions which, as you probably recognize, will very likely not get answers, but we'll.
Thank you for being here today.
Go ahead.
Hello, I'm a Greek, a European who left Greece because I saw my dreams being wiped away, had to shut down 2 businesses, and I came to the US to start all over again. Discussion today is about advice to future governments, and all of you have talked today about macroeconomic tools, structural reforms, ECB bonds, and other policies. But governments are voted by people. So how can the confidence of people to public policy makers and governments be restored? Desperate people do desperate things and vote desperately. How should future governments restore the people's confidence?
Thank you. Thank you very much.
I guess
And the last one over here, so the very last is now got the floor. Go ahead.
just like to agree with everyone. Great conference, very entertaining. A lot of has been talked about, mostly Europe, Greece, and money. But I find it very interesting focusing on these 3 things. One country has not been addressed, and that is Turkey. And I'm wondering what Alexis thinks about potentially 75 million more not very wealthy Turks joining the EU, and what he feels about that.
All right. I am not going to ask the panel to address every question, but if anybody has a 30-second final response, I would be happy to entertain it. Go ahead, Monica.
It will not be 30 seconds. It will be probably 1 minute. First of all, on democracy, yes, on democracy and on the European Parliament, I really suggest to my compatriot to come to Brussels. I think he has a completely wrong idea of what the Parliament does, and I think that in terms of participation to the vote, not only in our country, but in many other countries, we are well over 50%. The challenge is, of course, not to go down, and there I completely agree, and we are going to discuss later about this. But the challenge here is certainly not to delegitimize the European Parliament, which is exactly as most national parliaments elected. And it is a choice of the Europeans to go and vote, and it is a challenge for politicians to make this vote, let's say, meaningful. But the powers of the European Parliament are legislative and are real. Now, is it used with well or bad? I don't know. We can discuss. But I think that that is an important issue, and I agree with all the social questions you said, but it is not true that we don't have a legislative body at European level, and it is working as it can with the majorities it has. What to do, somebody asked. I think that there is one thing, what is the big gesture, the strong gesture you asked, that is necessary? I think that Prodi came out not long ago with a proposal that unfortunately my compatriots here again are not taking up, and I think they are wrong, because they don't want to be mingled with those Greeks, which I think is wrong, again, and that is to create a bloc. To create a bloc, France, Spain, Greece, some others, and the European Parliament, because in this thing, this could work, yeah? And I believe that that could be something important and useful to do. And you don't even need to change the treaties. Yeah? You can change the treaties later on, but I think that that would be a gesture that even the Germans, above all, in the Grosse Koalition coming up, will be listening to. Third and last point, well, more or less. It's not only desperate people who make wrong choices. Let me remind you that in Italy, for example, or in Austria, which are in northern Italy, the main voters of Lega are not poor, desperate people, you know, are also not only, but also people who are fearful to lose what they have. And that applies also to Austria or to Germany or to other people. At least that's what my green friends tell me, yeah, in terms of Austria. And I think that that is also important. You have to address also the fears of those who are fearful of losing what they have, because they think that that is what it is very important to keep. And so it is not only the solution to the desperation, but it's also the solution to those who actually think that what they have is that's the only thing they have to hang on to. And last point is on Turkey. I believe that the perspective of the joining the European Union of Turkey has been the biggest push to the democratization of Turkey. And the fact that it is basically, I think that the situation is changing now recently for many other reasons we don't have the time to go into detail with. But I believe that the losing sight of that perspective is bad for Europe and is bad for Turkey. This does not mean that we have to find a solution and to open our frontiers tomorrow morning. By the way, I was one of those who voted against the entry of Romania and Bulgaria in 2007 because it was too early. So I definitely don't think that we have to enlarge just like that. But certainly keeping that perspective is extremely useful for us and for Turkey.
Let me, if I might, unless, do you want to say a final word?
Let me say some comments. First of all, I want to say that Mrs. Flasbeck said about the experience of Cyprus. And I want to remark that there are a lot of differences between the issue of Greece and the issue of Cyprus. First of all, I want to remind you that Mrs. Merkel, 1 week before the Cyprus elections, was in Nicosia. Why she was there? To support Mr. Anastasiadis. Mr. Anastasiadis is the president of Cyprus, and he handled the Cyprus crisis. So the government of Cyprus was not a government that could go against the European leadership because it was supported by Mrs. Merkel. Secondly, I think that the size of Cyprus is not the same with the size of Greece. And I believe that, of course, economics are very important, but it's not only economics. Even they could find a way to stop the domino effect. I'm not sure. I don't believe that they have already found a way to stop the domino effect. I think that the political attitude of a decision like that to create a new Europe without the southeastern part of the European Union. Try to imagine a European Union and a Eurozone without Greece and Cyprus. That means that in this fragile area, in the southern east of Mediterranean, in this fragile area of Mediterranean after the Arab Spring and with the Syria conflict, how the leadership of Europe, the political leadership, could decide a decision like that? I don't want to say that I believe that there is no danger of domino effect, but I think that it's not only this. So this is why I believe that it is not good to compare the situation of Cyprus with a right-wing government with the potential, with the possibility of a Syriza government in Greece, supported by the people, elected with a democratic way, and elected only for this reason, to try to find a solution by saying no to our partners in the implementation of these barbarian measures. So let's try to imagine that Syriza is not in the framework. It is out of picture. The problem with the Troika program, with memorandum, is not only that it doesn't work. It's not only that it creates a dramatic situation in the social level, but also that it doesn't have results in economic level. Yes. After the consecutive year of implementation, nothing, no goal was achieved, not only the debt, but also, I said before about the debt that now it's 175% of GDP, but unemployment, recession. So how could you think that Greece could achieve the goals of this program to pay 83 billion euros till 2020 in interest payments? The programs say that 61 billion of this could be repaid through growth, but how we could achieve growth when we have recession and further recession, and 22 billion by the cumulative privatization proceeds. So I think that this is not a real picture, because even if we manage finally to sell everything in Greece, with this devaluation situation, I think it will be very difficult to collect more than 6, 7 billion, 10 billions, but not 22 billion. So I think that the problem that we have to confront is not only is not ideological problem. So I think that the problem is that the program is a failure, and we have to try to find a viable and real solution to this problem. You said about the structural reforms. So I believe that we have a viable solution, not only for Greece, but for the salvation of the Eurozone as a whole. You said about the structural reforms. Of course, we need structural reforms, but we have to discuss what exactly structural reforms we need. For example, the layoff in the private sector and the layoff in the public sector in an economy that is in recession, in depression, not recession, it's not necessary. And let me say that these days, the Tsipras government has put both health and education on a Procrustean bed, to remind the Greek mythology. University,
which bed?
Procrustean bed.
Stretching and breaking.
Yes.
Oh, thank you.
Been there, done that, got the T-shirt.
Yeah. So universities now are in a turmoil. Cuts in public funding are followed by layoffs of administrative employees, critical of the external funding of universities through research programs. So that means that universities in Greece, if they will not have other option to earn money, they will have the only option to put fees, not only to the post-grad lessons, but to put fees to the students that are coming to study in the Greek universities. And I think that this is a very big, a very bad development. So I think that this is the problem. This is the problem. We have to decide what reforms we need, because I believe that whatever memorandum says is not the mean to overcome the crisis, but is the goal. The austerity was their goal. And of course I believe that Monica said before about the shrinking of democracy in Europe. The shrinking of democracy was not by accident. It was an intention. Because it is very, very difficult in a democratic institution to have a consensus in these barbarian measures. So it was their intention to shrink democracy in the European level and the European institution. Of course, I believe that the problem of abstentions is in the participation crisis that our Italian friend said before. Of course, it's a serious problem not only in Europe but also in the United States. But we have till now we haven't found another model to work better than democracy. So we have to reinforce democracy. There is no other way. So I believe that the solution for Europe is to reinforce democracy, and I absolutely believe that if in one country, let's say in Greece, a government will be elected by the people, even though this people is in a very desperate situation, as you said, I think that this will be the big change that will give a domino effect in Europe, not only in the economic level, but the social level. Let's try to think what happened with Papandreou when he was prime minister at the very beginning, and he was in the European summits. Nobody wanted for the other pigs countries, for Portugal, Italy and Spain, to be in the same photo with him. Even the Spanish Social Democrat Prime Minister, Zapatero, even the Portuguese one, Socrates, didn't want to be in the same place in the European summit to take a photo with him. Why? Because they believed that Greece was a separate case. Greece was the black sheep. But afterwards, Spain was the black sheep, and Zapatero became. Afterwards, Socrates became the black sheep. And finally, Cyprus was the black sheep. So I was in a discussion with Mr. Stournaras, the Minister of Finances in Greece, after the Cyprus result. And I said to him, why you didn't support the Cypriots in this crucial summit of Eurogroup? And he said to me, why to do that? It was the first time in my period, in my term as a minister, that I was there, and everybody said to me that you done well. Yeah. So I think that this strategy, the strategy of the black sheep, it's a very well educated, very well planned strategy for the leadership of European Union. So the solution is to try to find an alliance between the countries of the peripheral, but at the same time between the people of Europe. Because, and this is my last word, I don't believe that we have a fight between Greece and Germany, for example. And on the other hand, a fight between Spain and Germany, Italy and Germany. No, this is not true. We have a fight between people, between social movements, of course, between these countries that now are in a great depression, in one hand, and on the other hand, with the neoliberal political parties and the neoliberal policy in European Union. So I think that if we try to create this alliance, then the ball will be in the other field. And then the leadership of European Union, and especially the German government, will have to decide if they want to protect the Eurozone or if they will decide German to be outside the Eurozone. This is our position, and I think that it's a position that it has a logical structure. So thank you very much, and thank you very much for the invitation and that you gave me the chance to discuss on a high level about the situation in Greece and in Eurozone.
Thank you. Well, we've come to the end of our time, in fact, well past the end of our time. I do want to say, though, that in this conference there has been one person here who has been in a situation, is in a situation quite different from everyone else, insofar as that he may be faced with the challenges of history at an exceptionally important moment in the future of his country and of Europe and of the world. And so I want to say, Alexis Tsipras, it's been a real honor for us to have you here. And while we do not know what will happen, there is at least the possibility that some years from now, many of us will gather and say, well, you know, we were there when Alexis Tsipras came to Austin. Good luck.